All right, everyone. Hello. Welcome to the Lion's Share Podcast, episode number 4. If you guys are tuning in after the fact, welcome back. We've had a few episodes so far, and it's different now because this is also the month of Ramadan. So during the month of Ramadan, Muslims fast from basically an hour before sunrise. We can't eat, we can't drink, we can't do anything, sexually or anything like that until sunset. So it's going to be a pretty fun month, and I would really, really recommend all you guys try to at least maybe even fast a day or two on a weekend. It's a really, really great experience. You learn a lot about yourself, and during the day when you're not drinking any water or you're not eating anything, the meal that you have at the end of your fast, the sip of water that you take is so rejuvenating. It feels so good because you were looking forward to it the entire day. So I would really, really recommend you guys do that. It puts an entirely new concept of gratitude in your life because we take a lot of these things for granted. We take meals, water, anything that we want, we have it at our fingertips. Living in the West, living where we are, right? It's so easy to get everything that we want, but being able to forcefully discipline yourself is a completely different experience. So I would really, really recommend you guys try that. Let me know how you guys feel. I guarantee you guys will love it, honestly. And there's tons of benefits to dry fasting as well, so definitely check that out. But regardless now, in today's video, we're going to be going over various different quotes from the best traders. We're going to be taking a look at different quotes from motivational people, anything that we basically need some sort of motivation in today's market climate, because the market is going up, down, it's dropping. It's a lot of people, I'm sure, have lost money, but people in the group, I'm sure, we are making money, but the vast majority of people right now are not doing well in the market, and having some sort of motivation is very, very important. Also, learning from the best traders in history, what they say, their quotes. We're going to be dissecting that, and we're going to take a deeper dive into what they're saying and how we can learn from them as well. So essentially, quote number one is from Paul Tudor Jones. Really, really legendary trader. He says, the secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge. I'm going to say it again. The secret to being successful from a trading perspective is to have an indefatigable and an undying, unquenchable thirst for information and knowledge. We need to remain curious. We need to constantly be pushing forward and always have our eyes open for different things in the market. We can never remain stagnant. Just because we understand some sort of technical analysis or just because we understand a little bit about the market, you always have to remain learning. There's always so much more to learn in this market. You learned 5 technical indicators, you learned support and resistance, you learned candlestick patterns. Great. There is so much more that you don't even know. I promise you. So being able to consistently persist and push forward, remain curious, is very, very important. You have to spend, if you really, really want to get good at this, if you really, really want to get good at trading, you have to spend hours and hours and hours. You have to put a lot of time and effort into this. It does not just come quick. It is not something where you can just by an instant be able to just be very, very good at trading. It's impossible. So once again, I'm not your financial advisor. This isn't financial advice. Trading is very, very risky, etc. Right? You can join a group. You can just follow along trades, and you'll end up, doing well, whatever. But to really, really learn how to become a good trader on your own, you need to fail a lot. You need to learn a lot. And you need to constantly be hungry and consistent and curious about what different things the market are doing. And you know, you got to diversify you have to diversify how you intake your content. You have to look at different websites for news. You have to read more books. You have to open your horizon to what is out there. Watch podcasts. Read up on people from the past. Read up on people from the present. It's an entire journey of multiple different things, multiple different factors. And what I'll say for the end is basically, once you even know all of these different things, right? Once you understand all of the different knowledge that it takes to start posting trades or like taking trades, etc., right? Once you have that knowledge of taking the trade specifically, once you're in the game itself, once you're taking the trades with actual money, it is a completely different feeling. So experience is very, very important in this market. To be a good trader, you need to have experience. Trading on a demo account is not the same as trading with real money. With a demo account, you are trading fearlessly. You don't care about the outcome. You can think completely logically. And why is that? It's because there's no emotions involved. Because there's no emotions involved, almost every single trade that you're making is a great trade because there's nothing for you to overthink. That's the sauce that we need to get to in order to become really, really good traders. We need to try to detach ourselves from the emotions. If we can do that, that's how we'll be able to be much better traders. But regardless, in the beginning, you need to learn. You need to test out what's working, what isn't working. Demo trade, paper trade, do everything that you need to do. Next quote from Nassim Taleb from Antifragile. So, antifragility is beyond resilience or robustness. The resilient resists shocks and stays the same. The antifragile gets better. So what does this mean? The resilient resists shock and stays the same, but the antifragile gets better. So during times of market volatility, when things are shaky, when there's a lot of difficulty going on in the market, we have to use volatility to our advantage. So if the market is going up for weeks and weeks and weeks, and then we have a few days where the market just starts to crash, right? The anti-fragile adapts to that and makes money regardless of which direction the market is going. We're able to adapt to, okay, if it's going up, cool, we'll make money. If it's going down, we'll make money. If it's going up, we'll go long. If it's going down, we'll go short. There's different ways to make money in this market. And it's always important, regardless of what is going on, to keep an open mind and to not be married to a direction. That's one of the most important things. You cannot be married to a direction in the market at all. You always need to be willing to adapt. You always need to be willing to take certain positions as hedges or build a portfolio around keeping things safe. For example, cash is a position. If you think the market is going to go down, you could go long volatility. You can go long various different things. You could go short. There's different ways to make money in the market. Do not remain stagnant. Do not remain married to a direction. You could be resilient. Great. The market's falling. You could be resilient. You could be like, oh, I'm losing a lot of money. Oh, my God. That's okay. Losses come with the game. Great. You could be resilient. But you have to be anti-fragile. You have to be able to not just be resilient. You need to level up and be better. You can't just take the losses on the chin and be like, oh, yeah, that's okay. Losses come with the journey. I'm a very, very strong person. Losses come with the journey. Instead of doing that, instead of sitting there and like being strong, congratulations, you're strong. That's amazing. Flip that on its head. Learn from what you're doing wrong and still try to make money regardless. It's good that you have a good foundation of strength and a good, strong mental framework and mindset. It's not enough. The goal should be to make money. It's not just to be able to take a beating, right? So, just because you're embracing failure and you're taking the losses is not an automatic reason to just be happy. But again, take the setbacks for what they are. Learn from your mistakes. Take the setbacks. Adapt to them. Analyze what mistakes you made and adjust. Maybe the problem was your risk management. Maybe you were in a really, really good trade, and the problem was, okay, I'm in a very, very bad trade in terms of how much money I put into it. Say I have X amount of money. I put 50% of my portfolio into a trade. Why would you do that? That's very, very risky. So maybe the trade itself was good, but because you put too much money into the trade, you automatically start thinking, okay, we're down this much money. Okay, let me try to sell. Maybe the risk management was not on point. So, you got to look at what's going on, try to adapt, try to fix it. The next quote is from Bruce Lee. So Bruce Lee, the martial artist, the actor. He says, adapt what is useful, reject what is useless, and add what is specifically your own. Okay. So when I first started learning how to trade, right, there were tons of different tutorials online. There were tons of different people that would just be like, okay, if the RSI is below 30, if the MACD is oversold, it's a good long opportunity. If the RSI is above 70, if the MACD is overbought, it's a good short opportunities. So yes, we learn from these different things that are useful, right? We reject what's useless. So if I learned something that's completely irrelevant, you reject that. But it's not just a matter of remaining that way. You have to learn. As you're learning, you have to basically also add what is specifically your own. Once you specifically add what's your own, that's when you can start making your own trading strategy. That's when you can start being able to really, really hone in on what works for you, what doesn't work for you, how much money I should put into a position, what I should do when a trade works, what I should do when a trade is starting to not work. That's when the art form comes with trading. Trading is like art. If you're able to adapt and move with the ebbs and flows in the market and be able to move with the waves of what's going on intraday, if you're a day trader or if you're trying to swing trade, trading is like art. So if you're able to adapt with the waves back and forth, that's the beauty of it. That's the beauty of it. And you're not going to be able to learn how to deal with the waves if you have not, number one, learned a lot from a lot of different sources that know more than you, right? And then number two, if you have not tried to put your own twist on it. The reason why I say that you need to put your own twist on it in order to become a really, really good trader is because what is consistently working only works in a finite amount of time. Does that make sense? So say, for example, you learn a strategy, and that strategy is really, really high success rate. It's great. If this is oversold, if the RSI is oversold, if the MACD is oversold, we're trading at a support level, the simple moving average is at the 200, the trading, whatever, blah, 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 blah. High success rate. Congratulations, right? How often do those trades occur, though? So you're not always going to have that many trading opportunities if you only look for trades that you've learned, right? You need to be able to adapt your mind and open your eyes to other new trading possibilities. Once you're able to do that, that's why I'm saying, like, you need to be able to put your own twist on things, because that's when you'll be able to make more and more trades throughout the day. The more trades that you take, generally the more money you can make if they're all high quality trades. Once again, I'm not your financial advisor. This isn't financial advice. Very risky stuff. Blah, blah, blah. Right? But that's the point. If you're able to open your mind to different possibilities and not just look at the highest probability trades that you've learned online or from a tutorial, that's when you'll be able to take a lot more trades, potentially make a lot more money. So adapt what's useful, reject what's useless, and add what is specifically your own. That's why Bruce Lee says, to really, really be open to new ideas. You can't just blindly follow them. You have to test, refine, try to become better, and see what works for you. Do you have music going on while you trade? No. AP, alhamdulillah. Thank you, brother. Renovia, thank you for the likes. Okay, so quote number 4. This one I think is gonna blow people's minds. So quote number 4, Charlie Munger. In Poor Charlie's Almanac, he says, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." How often do we look, especially when we started learning how to trade, you start looking at penny stocks. You're like, oh my God, penny stock. Oh, wow, it's at 50 cents. If it goes to $1, that's 100% gain. Oh, the stock is at $1. If it goes to $2, it's going to be. He says it's far better to buy a wonderful company at a fair price instead of a fair company at a wonderful price. Penny stocks are not wonderful companies. Penny stocks are trash companies generally, right? You cannot be happy to be invested in a penny stock purely because the price is low. The price is low for a reason, guys. The price of penny stocks are low for reasons because they're just generally not good companies. So Charlie Munger is saying that it's better to buy a wonderful company at a fair price. A fair price would be a bit more expensive. So basically, you got to focus on quality over quantity. Investing in stronger companies with better fundamentals, with solid fundamentals, is much better instead of if the price isn't perfect. So you're better off getting something that is a bit more expensive. It's essentially what he's saying. And just purely trying to get into penny stocks is not the way to go. There's no use for it. So another thing with this is that you would want to think more long term. Especially when trying to invest in a company, you want to think more long term. You don't want to get into a company that is already terrible. Penny stocks are by default, they're not great companies. So you don't want to invest in a penny stock long term, in my opinion, right? You would rather feel way more comfortable investing in a company that's a bit more expensive and hold that long term. Because at least those companies that are a bit more expensive, they tend to have better balance sheets, better cash flow statements, they have better books, they're a better company on paper. Penny stocks are not. So it's always better to think more long-term in terms of long-term investment. A great company will reward you over time, even if you don't buy the bottom. Does that make sense? So different things to take into consideration there. Gains. Thank you, brother. So Jim Rohn, he's a motivational speaker. Jim Rohn says, discipline is the bridge between goals and accomplishments. So I speak about discipline a lot. Is because the only way to become a consistent and a successful trader is you need to have discipline. Without discipline, without being able to stick to your plan, your risk management, your emotional decisions, if you're not able to stick to your plan, let me just repeat that 1 second. So trading and discipline basically goes hand in hand. If you're not disciplined with your trading, you're not going to be able to make money. You're not going to be able to be successful. You need to stick to your plan. You need to stick to your risk management. You need to stick to how much money you're putting into each trade. Stick to your stop loss. Stick to why you're taking certain trades. If it goes below your stop loss, you sell. You cannot overly marry a position. You need to remain disciplined. You need to remain humble. Just because you took a trade doesn't necessarily automatically mean that it's going to work. You need to be okay with the fact that the trade that you're in is not necessarily going to work. What does that essentially do? You need to be able to distance yourself from that trade. It's okay. It is what it is. Move on from it. Take the next trade. What does that take? That takes discipline. Being able to do what's best for you in that moment and detach yourself from your emotions is very, very difficult. That's why being able to not take emotional decisions is difficult at first. But once you can harness that, and once you can really, really get better and better at doing that, not just with trading, but in your day-to-day life. If you know that you shouldn't be doing that certain thing, or you shouldn't be smoking or drinking or eating that thing, or if you know that you should be working out, if you're able to remain disciplined in your day-to-day life, it's so much more easier to remain disciplined in trading, because the whole thing is controlling your emotions. If you're able to control your emotions and your impulses, that's why he says discipline is the bridge between goals and accomplishment. If you're able to remain disciplined in all of these other aspects, that is the bridge. You're not going to be able to jump across from your goals and accomplishments, from goals to accomplishments, right? You need to be able to have a bridge. Discipline is that bridge. So the more disciplined you are, the stronger that bridge is going to be. You're going to be able to just, drive along that bridge. You'll be able to walk along that bridge. It is what it is. So you need to be disciplined. You need to be disciplined. Control your mind. Obviously, you can have fun, right? But there's limits to it. If you just binge and you just eat ice cream and you just do a bunch of really, really terrible things throughout the day because you're in pain. For example, if you just lost a lot of money, and what is your impulse? Oh, I'm gonna watch a bunch of things I shouldn't be watching, and I'm gonna eat a bunch of ice cream. What does that do for you? Where's the growth in that? When you lose money in the market, when you fail, you have to sit down with that feeling, accept it for what it is, and try to learn from it instead of trying to nullify the pain. You need to sit with the pain. You need to learn from the pain. Don't try to nullify it. Don't try to make it go away by inebriating yourself. Sometimes that pain is very needed because it'll help you grow into a better person. But here's the difference. Many people don't want to go through any pain. That's why people would rather live in a more comfortable environment. For us, for example, we're learning how to trade, right? Sorry, I can't read the chat right now, but we're learning how to trade. All of us, we're on a journey to become better traders, right? Everyone that's watching this, we're learning how to trade. So you already experience more pain financially than the average person does. You are deliberately putting yourself through pain financially. You're putting yourself through emotional pain based off your finances. You're putting yourself through emotional pain for what? So that you can grow into a better person. So I'm telling you, if you try to nullify that pain in the beginning aspects of trading, because in the beginning of your trading journey, there's going to be a lot of hidden gems that you can learn from to become a better person in all of these different aspects. If you go through pain, if you just lose a lot of money, if you're down $1,000, $5,000, $10,000, $500, whatever it is, if you lose a lot of money and you try to make the pain go away, you're never going to learn from it. You're going to continue making that same mistake, which is why it's really, really important to sit down, try to learn from the mistake that you made, deal with the pain as long as it takes, and that's where the magic is. Hope that makes sense. That's why discipline is so important. Super, super important. You need to hold yourself accountable. It's difficult to hold yourself accountable. It's very, very hard to hold yourself accountable. But you need to hold yourself accountable, especially with trading. You need to track your progress, what works, what doesn't work. Because if you're not holding yourself accountable, and instead you would rather just inebriate yourself and nullify the pain, what's the point of this? What is the point of this? You're not gaining anything out of this. You're not getting better every day. The point of trading and this journey is to try to become at least 1% better, at least 0.5% better every day. 1% better every single day is huge. 0.5 percentage better every single day is huge. I'm sure we all did the math in terms of, if I grew my portfolio by 1% every day in a year, I'll be up this much, blah, 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 blah. Imagine you develop yourself into a stronger person by 0.5% or 1% every day. Where would you end up being? So you have to look at that. Don't just jump. Don't be afraid of the pain. Don't be afraid of not learning don't be afraid of not learning from any mistakes. Don't be afraid. This is a part of the journey. This is what you asked for. You want to become rich. You want to become a successful trader. This is what you asked for. This is what comes with it. Don't shy away. Embrace it. Become a part of a community of people that are also on the same journey as you. Try to relate to people around you, because this is also a very lonely journey. This is not something that most people do, right? Most people just have regular jobs, just chilling, living life. Great. I'm going to go home to my wife, my kids, have a great life. No one wants to go through this pain and struggle, right? What's the point? Which is why when you're going through this stuff, it's important to be surrounded by people on the same journey as you, so that you can relate, so you could speak to each other, to be there for each other. And that stuff is very, very important. No sound. Sound should be on. Austin, I should drink a beer while watching to enjoy the British. Well said, wise words. Appreciate it. Thank you, T-Bagger. Appreciate it. Appreciate it, brother. Okay. So, this is probably one of my favorite quotes. This quote is from Mark Douglas, Trading in the Zone. He says, "The goal of a successful trader is to make the best trades possible. Money is secondary." My bad. Do you guys hear me? Okay, I'll say it again. But he says, the goal of a successful trader is to make the best trades possible. Money is secondary. That is probably some of the best advice in trading. You shouldn't care about making money when you're trading. All you should care about when you are trading is to make the best, highest quality decision. Take the best, highest quality trade. Money is an afterthought. The money will come. If you are only focused on taking the highest quality trade, the money is going to come. This is what it means, like, to really, really only focus on quality. Focus on the process, not on the outcome. Focus on the process, not on the outcome. You have to remain patient. You need to remain disciplined. You need to only wait for a really, really good opportunity to enter a trade. Once that trade is there, make sure you have your plan. Make sure you have proper risk management, proper position sizing, and boom, take it. Take it. Don't be afraid. Take the trade, regardless of whether the trade works or not. That is the best possible trade that you can take in that moment. If you have a repertoire of trades that have worked before with the same variables as this one, okay, check. All of the different things that I took before, this works 90% of the time. I'm going to take it right now. Who cares if it doesn't work? Because that is the best possible trade that you could take in that moment. Money is an afterthought. So if you're focused on completely only taking high quality trades, some trades are going to work, some trades aren't going to work. And that's the beauty of it. That's the beauty of it. Money almost becomes an inevitability. Money becomes an inevitability when you're taking high quality trades only. If you're being patient and you're not forcing any trades, if you're not like in like a dizzy frenzy, like, oh, I just lost some money, let me try to get some more money back. Oh, I'm going long. Oh, it doesn't work. Okay, now I'm going to go short. Oh, support level just broke to the downside. Oh, okay, now I'm going to go short again. If you can control yourself, if you can remain disciplined through that turmoil, right? And if you could only take the highest quality trades, money is an afterthought. It becomes almost an inevitability. And that's very, very important. So you always have to stick to a strategy. You always have to be okay with the outcome, because you're not trading for the outcome. You're trading for the process. The process is what is the most important. You're not trading for the process is what's most important. You're not trading for the outcome. Obviously, you want to make money, but your main goal should be to take the highest quality trade. It should not be, oh, I want to make this much money on this trade. Never. You should never go into a trade thinking, okay, I want to make $1,000 on this trade. That's the wrong mindset to have. You need to only focus on, okay, I'm only entering a trade if it's the best quality trade that I could take. That's very difficult for people. Once you can master that, once you can be patient and control yourself, control your impulses, control your urges, once you could do that, money is an afterthought. It is an afterthought. Making money ends up becoming an inevitability. So that's that. You know, and one of the things with this is it boils down to mindset. Sometimes you could take the best quality trade you want, right? This is the flip side on this. You could take the best quality trade possible. You can take an amazing trade. Oh, wow, we're at support. Everything is looking bullish. I'm going to go long here. And then what ends up happening? The trade doesn't work. So then you start doubting yourself. You start doubting the process. You start doubting, okay, maybe I shouldn't be patient and wait for these trades. Because whenever I'm patient now, the trade doesn't work. So what do? You start going into a frenzy again. Okay, I'm going to try to force these trades. I'm going to go long, short, long. For what? And then you end up losing more money. Time and time and time again, that's what ends up happening. So we have to learn from our mistakes, not make these same mistakes over and over, and just accept that trading is a numbers game. Trading is a game of probabilities. Not every trade is going to work out. All you got to do, take the best quality trade that you can. And have a strong mindset in terms of being okay with losses. It's a numbers game. So not every trade is going to work out. It's okay. All right. Quote number 7. Brett, this is Mark Douglas and Brett Steenbarger are really good trader psychology. They authors of trader psychology. I would really, really recommend you guys checking out their books. So Dr. Brett Steenbarger, he says in The Psychology of Trading, he says, the best traders are not those who are right most often, but those who manage risk best. Once again, he says, the best traders are not those who are right most often, but those who manage risk best. So, obviously, it's much easier to trade when you have a very high success rate. Congratulations. Having a high success rate is awesome. But there are people that have a much, much lower success rate, but they are profitable traders. How is that possible? It's because their risk management is on point. They make sure to sell out of a position as soon as it drops below their level, and they only enter with a very, very tangible, small percentage of their portfolio, and they take a lot of trades like this, and they manage their risk properly, and they exit quickly. They cut losses very, very quickly. That's the one determining factor to become a profitable trader when you have a lower success rate. You need to cut your losses quickly. When you have a higher success rate, it's much easier to be diluted into all of your trades are winning. Oh, I have a high success rate. Oh, this trade's going to work out as well. I don't need to have a stop loss. I could have a loose stop loss. Doing that oftentimes is very detrimental because you start to live with a mindset of grandiosity where, oh, I'm never going to be wrong. Oh, I'm wrong so little of the time that it's okay. Oh, I'm not going to have a tight stop loss. The way that these traders with a 50, 60% win rate. The way that they are profitable is because they manage risk really, really well. They cut losses quickly and they let their winners ride. They don't just take profit very, very quickly. They let their winners ride. And this is the foundation. This is the foundation of profitable trading. It's because they also enter with a small percentage of their portfolio that they're able to detach themselves emotionally from their trades. Does that make sense? When you only enter with 2, 3, 4% of your portfolio into a trade, you don't really care that much about the outcome. Because if you have everything set in place, your stop loss, your limit of what you're going to do, your take profit limit, you let things ride out way more smoothly, because not everything is life and death. You're not thinking, oh my God, I need this to work out. I put 50% of my portfolio into this trade, blah, blah, blah. Oh my God, it needs to work. You're not thinking that. It's because your position sizing, your plan, your risk management, your stop losses, all of these things combined allows you to think more calmly and clearly. That's the most important thing with trading. You need to think more calmly and clearly. You need to do everything that you possibly can to put yourself in that state while you are trying to trade. And the way to do that is by proper risk management, proper stop losses, putting a certain amount of your position size, not over allocating, and all of these things combined. Because, at the end of the day, like, emotional decisions, they lead to terrible, terrible outcomes. When a trade goes against you, when a trade is not going in your favor, you have to take a deep breath. You have to stick to your plan, and you cannot panic. You have to just let things go the way that they are and just accept the fact that not every trade is going to work out in your favor. It is what it is. Super, what's going on, brother? All right, do you guys have any questions? Feel free to ask any questions in the chat. Let me know how I can help. I will answer everything that you guys want. I also have some questions from before. So if you guys want to ask any questions, feel free to let me know. Anything that I can help with. How do I stay calm during market? Cool. How do I stay calm when the market is in chaos? So you have to stick to your trading plan, stick to your risk management. Do not, if you're getting overwhelmed, it's okay. It's okay to be overwhelmed. Don't try to force yourself into like continuing to trade. Take a break, go for a walk, maybe drink some water, wash your face. It's okay to feel overwhelmed, but do not force yourself to continue trading while you're feeling emotionally immobilized. You need to be able to be aware of how you're feeling. If you're not feeling well emotionally, if you just had an argument with someone, or if you are upset about something, or you're feeling anxious, trading in that state is very, very bad and very, very detrimental. So just please do not force anything. what are some tips for your trading routine? So essentially, prior to the market open, you need to be able to analyze what's going on in the market. You need to look at what the futures market is doing. You need to look at what the S&P 500, the NASDAQ, the Russell, the VIX, what the bonds are doing. You need to look at the overall news for that day as well. If there's any important news occurring during that day, you need to look at it. You need to be able to see if there's any earnings reports. Go to different websites that are also sharing news articles. For example, Bloomberg, CNBC, MSNBC, things like that. Look at different ways of getting information about what's going on in the market day to day. And you need to spend time refining this. You need to spend time looking for things that are much easier to look at. And eventually you'll see, okay, whenever this news occurs, or whenever we have this news event, whenever this stuff occurs, there's usually a huge spike or a huge drop. Something crazy ends up occurring in the market. And then you start thinking, okay, I'm not going to be trading during this time. So it's important to set time before market opens to do all of this analysis, because you also want to see, okay, prior to the market open, the S&P 500 looks pretty weak. Interesting. Where are the levels of support for the S&P 500? Where are the levels of support, resistance for the NASDAQ? How are the other large tech stocks doing? Looking at the other large tech stocks is very, very underrated, and a lot of people do not do that. On this channel, we do that. But taking a look at the large tech stocks, the trillion dollar companies in the market, is so important, because you're able to see how the overall market is affected by just those stocks. The overall market is affected by basically 8 stocks. That's why you have to look at those stocks as well. So, in terms of the tips, I would be looking at all of these different stocks prior to market open, looking at all the news for the day. And, after the market closes, I would be up. Basically, after the market closes, I would look at all the trades that I took. I would analyze what trades worked, what didn't work, and I would go into detail to try to write down why it didn't work, what I could be doing right, what I could be doing differently, because you're not a supercomputer. You're not going to be able to remember everything perfectly. That's why it's so important to write things out. As you write things out, just purely based off of the fact that you wrote these different trades that worked and what didn't work, just because you wrote them out, the next time a trade like that occurs, you're going to be like, damn, I felt so terrible as I was writing this trade out because I felt like an idiot. So now you have that mental, you have the muscle memory of writing out and taking the time out after the market closes. Like, okay, I entered this trade with a large percentage of my portfolio because I was tilted and I wanted to make my money back. So because you wrote down that you made a stupid decision, basically, the odds that you're going to continue making that decision goes drastically lower, I would hope. So, that's what I would do for my trading routine. Whatever besides, thanks. What kind of hair dye do you use? None. CK. Hi. What indicators and factors are you looking at when exiting and selling a position? And do you always take a set profit? So the main indicators that I'm looking at are my indicator. I'm looking at on a daily chart. It's important to look at various different support and resistance levels. If you're day trading, you need to look at various different support and resistance levels. Look at the candlestick patterns. Look at the technical setups. Look at RSI, MACD. Look at VWAP. You need to look at the 10, 50, 200 simple moving averages, the 8, 13, 21 exponential moving averages. And it's important to look at all of these things in conjunction. Not just those indicators, but you also need to be looking at the S&P 500, the NASDAQ, the Russell, and the VIX, almost all in conjunction. So that's why it's important to have a screen with various different charts on them. Because if the S&P 500 is going up, 9 times out of 10, the NASDAQ should also be going up, and the Russell 2000 should also be going up, right? If the S&P 500 is going up, and the NASDAQ and the IWM, which is the Russell, are breaking below support, there's a very high likelihood that the S&P 500 is also going to stop going up. So you would not have known that if you were not looking at the NASDAQ and the IWM. So those are just other indicators and factors that I'm looking at when I'm looking to exit and sell. And do you always set a take profit? So on same day expiration contracts, I generally sell some of my position at 10 to 15% profit. So it's always good to solidify profit, and it's always good to take base hits. Not every trade is going to be a 100% trade. Today, actually, we got about like 70, 80, but not every trade is going to be 100%. And it's important to solidify some sort of profits, and base hits are important. What books do you recommend? So I would recommend Mark Douglas's Trading in the Zone. I would recommend Brett Steenbarger, Trader Psychology. I would recommend Steve Nissen's Candlestick Guide. Reminiscence of a Stock Operator. Grit. So it's not just a matter of looking at books for the stock market. You also want books that will help your mentality. When will the market start recovering? I have no idea. What's the best percentage taking profit? Yeah, so I just mentioned 10 to 15% on 0 DTE is generally when I would do that for same day expiration day trades. Xander, do you think it's easier to trade stock over crypto? Personally, I think that crypto is much easier in terms of technical analysis than stocks. Because crypto is much more manipulated. How do I stop being greedy about profits and focus on the process? So you need to, once again, you need to remind yourself that trading is a numbers game. Trading is not, you're not going to win every single trade. There's going to be trades that you're going to lose, and that's completely fine. So you need to be more process oriented. You cannot think more in terms of, okay, I want to make this much money on this trade. You can't think like that. You need to think, okay, regardless of whether the trade works or not, I want to take the best possible trade. So if you're able to do that consistently day in and day out, then it'll help you renegotiate with yourself about how you feel about trades. So that's one of the most important things, is like you need to change your perspective about how you're feeling about trades. If you could change your perspective about trades and what your end goal is with trading, your end goal should not be making money. Your goal with trading should be to take the highest quality trade. So that's same concept. So what are ways to detach emotionally? So same concept. Focus on the process. Do not focus on the end result of making the money or losing the money. Understand that trading is a probabilities game. It's not a life and death. It's not life-changing event. It should not be. You need to put a certain amount of your position, your portfolio into each position. Don't over-allocate yourself. Try to be very comfortable with every trade. Try not to over-allocate yourself, right? And just improve your risk management. Be more disciplined. So, yeah. Hope that made sense. Hope you guys enjoyed. I hope you guys enjoyed the pod today. If you guys have any other questions, feel free to message me them on DM if I can help. But yeah, okay, cool. I guess that's that. I hope you guys enjoyed the video today. Please make sure to like, comment, share the video with your friends and family. If there's anything that I could add to these videos that you guys would like me to talk about, please feel free to let me know. And I'm here to help. So if there's anything that I could do to add to different things, if you guys like this format already, please let me know as well. I'd love to know your input. But with that being said, I appreciate everyone that's watching until this end, right? Appreciate you guys. So I hope you guys have a wonderful rest of your week. Hope you guys have a wonderful rest of your day. Love you guys. Take care. Have a good one.